Good morning, traders. I hope everybody's having a fantastic weekend so far. I wanted to hop on really quick and test out something in the on-demand feature of Think or Swim, which is the trading platform I use. So I'm currently taking a trading course from a person who's got over 30 years of experience trading in the stock market. I'm also a member of the LPP group, where I really appreciate and enjoy the community. I've been in that community for about 2 years now. And prior to that, my trading experience was just some long term investing in IRAs, um, real estate, which is where my long-term investing passion is, and I will also be posting several videos about real estate investing because I believe that it's just a phenomenal way to build long-term wealth for yourself and also for your family going into the future. Um, so if you're interested in that, just check out my other videos, and I will try to provide some really great content for you guys going forward. If you haven't taken the time to like my channel yet, please do so now. You can subscribe and like this video. Um, so a little bit of my background in investing, like I said, I started with a 401k in my early 20s, and I got interested in trading and market timing in 2009. So I bought my first shares in several companies that had had really good track records up until that point, took major dives during the recession, and I held a variety of those positions for between a few months and some of them up to 10 years. Some did well, some did exceptionally well, and some went bankrupt, as you know. It was a really tough time for the American economy. And it was only in the last 3 years or so that I realized that if I was willing to put the effort in, I could turn trading into a full-time occupation. So that's what I'm currently working on, and I'm super excited because I just got approved to trade futures, and I like that because there's no PDT rule and wash sales do not apply. Also, I find that it's a little bit easier to just trade the future directly, whereas before I had been trading ETFs that were linked to the futures, so the inverse or the tracking ETF, which I do still do a bit of. For instance, when uh, crude oil takes a dive during the day down into a good supply zone or demand zone, I will pick up shares of UCO or USO, but usually UCO. And I might hold those for a couple of days. But for my intraday trades, I've really switched primarily to focus on trading within the futures itself. And I would love to encourage you to look a little bit closer into that and see if it's right for you. For me, it definitely seems to be a much better fit. And I find it to be a little easier, actually. Um, so what we're doing this morning is trialing a system that I have just started reading about. And it's a means of trading with the trend by taking a look at the daily chart. So this is the 1 year, 1 day chart for the /ES, which is the Emini S&P 500 index futures. And as you can see, /ES has been on a pretty consistent uptrend. It has dips down into demand zones periodically, and I haven't taken a look at any of these dives, but I would venture to bet that most of them coincide with some sort of national news event or I don't know, Fed meeting, something of the sort. Usually you will see that there is a technical play setting up on the longer term charts, and some sort of fundamental catalyst will come along and force the hand of that technical play. So again, this tracks basically the stronger points of our economy, and the American economy has been pretty good for a while. Um, I know that there are a lot of analysts out there who are calling for a recession, and I also am looking for one to happen in the next little while, just based on how long this has been running up. However, we need to focus on trading the chart that is in front of us and not the chart that we're afraid is going to happen or someone tells us is going to happen. Trade with the trend and use stop losses. So the video that I'm watching this morning is talking about a means of trading by so intraday swing trading instead of taking quick scalps, which is where I have primarily had my focus. This method talks about taking a look at the daily chart, finding a future or an ETF. These should work for stocks, ETFs, whatever you're trading. So it should be applicable no matter what you're using. Finding a ticker that on the 1 year, 1 day chart is consistently trending up, but frequently has wicks down, which mean that there was a low during the day, but that the candle closed close to, above, or at its high. And as you can see, that happens quite a bit with the Emini here. And that also we have just recently identified a fresh zone here, a fresh demand zone. So the market tried to take a dip down here based on, okay, so we're actually looking, because we're in the in-demand feature, we are looking at November, and several things took a little bit of a dip during that time. So I don't remember what the fundamental catalyst was there, but that doesn't actually matter. I only peripherally pay attention to that. I'm mostly following the price action that's happening right in front of me. So because we've tapped down into a demand zone, we're in a consistent uptrend pattern, and we're bouncing out on the daily from this newly identified demand zone, I am going to try out my new system here. So as we can see, we had a big red candle going into the open with a big wick down. Something else I've noticed, it doesn't happen all of the time, but quite frequently when I get a big wick in one direction or the other at the open or very near the open, I tend to see an overall direction for the day heading in the opposite direction. Like I said, it doesn't always happen, but when I have bought for intraday swings according to that plan, it seems to go pretty well most of the time. So as you can see, I took one contract long in /ES in the on-demand feature. And what I want to do is check to see what yesterday's low was. And we're going to just use a drawing tool really quick. I don't want to put an actual long-term price level in here because I don't know that this is going to be a price level that's respected long-term, but I want to be aware of yesterday's low while we're taking our positions in this short-term swing. Okay. So what I want to do here is click on my trend line, edit properties, Begin point, end point. So I want to set that to, what's this day here? Nice. We'll just run into the 10th. See, yeah. So that just pulls over the low from yesterday and extends it a couple of days over just to see if we're respecting that line. And 3138. So I like to trade off of the 5-minute chart. I find that I have less anxiety and that I'm able to hold my positions a little bit longer during the day. I don't know if anybody else experiences this, but while day trading, um, sometimes I'll enter a position and then I'll get nervous and I think that I'm wrong, and I'll exit the position, especially when trading on the 1-minute or the 3-minute chart, and I'll, I'll pop out, cut my losses, and it immediately reverses exactly where I thought that it would, and then it's on an uptrend for the rest of the day. So real quick, again, I don't know if my cursor is in the right position or not. For some reason, it was tracking a little bit off kilter yesterday, so I apologize if that's happening. And also, if my dog starts barking, please disregard. He thinks that I should be paying attention to him all the time and not trading. But he doesn't have a job, so uh, totally lost my train of thought there. Sorry. Okay, so we're trading in the 5-minute chart because I have found that that's where I'm most comfortable. Anywho, so what I was looking at was this candle that appears to be reversing, and if you take a look at this wick down here, so we had identified this as a possible area of support and resistance. And also yesterday's low could end up being a good place for a stop loss. So I was going to enter a stop when I hopped in the position up here. And let me go ahead and click show. Oh, it's not showing my trades for some reason. I don't know what's wrong there. Anywho, so I was going to enter a stop just around this level, and then I got distracted with making the video. But what I want to do is use an OCO bracket to take another position to show you how to enter using the OCO brackets, and then how to edit them after the fact so that you've got your stop and your target sell order in place. So we're going to just double check to make sure everything's right, and I'm just going to leave these as they are because I'm going to modify them once we place the orders. So I am going to go ahead and take the position here. Ooh, I don't know why that's showing. Sometimes it's a little bit offset and I don't quite understand why, but just in the on-demand feature. So here we've got 313847. So I'm just going to right click on this bottom order, click cancel and replace, and what did we say, 3138.36? And I'm going to go with 30 just to give ourselves a little bit of space. And I'll change that to good till canceled. Fine. 25. Okay. why that's not allowing me to enter. Okay, there it goes. All right, so what that's done, as you can see, is moved my stop loss order to just below yesterday's low. And I picked that level because I'm working on using wider and more appropriate stop loss orders. Reason being, I feel like I'm hopping out of trades much sooner than I should because I get nervous. And as long as the price action is moving in my direction, I want to be in the trade. Um, you're going to get pullbacks. You're going to get wicks down to run stop losses. Um, but if the trade is heading in my direction, overall, I'm working on sticking with it until I'm proven wrong. And like we talked about on the daily chart, /ES has been hopping down to its daily low and then trending up for the remainder of the day. So what we're doing here is trying to catch that reversal. And I probably wouldn't be so cavalier about these entries if if this wasn't in the on-demand feature. So please do not take that as a recommendation from me about how you should trade. And I just realized that I had intended to modify this to 2 because I didn't enter the OCO bracket when I took my first position, but I want this to reflect both contracts that I have open currently when it sells. So next we're going to see where our target sell price should be. So 3151 is the high of the previous day, and our high today was 3149. I'm going to go ahead and set this above yesterday's high because as we saw on the daily chart, /ES has been closing higher every day prior to tapping down into this zone, and I'm going to bet with the trend on this that it's going to continue to do so unless some unforeseen tragedy happens in our economy. I believe that the S&P 500 is going to track up from here. So we're going to, well, let me show you another way because I already showed you how to modify that from the right click. So if you unselect auto send and move your little arrow upwards, and I'm not going to move it too much above yesterday's high, but I'm just going to set it here. So if you unselect auto send and then just grab onto your arrow or your, I don't know what that is, little order indicator, drag it upwards, it's going to pull this up and give you another option to edit. So we want to increase this size to 2 and just make sure that we're set to good till canceled. Everything looks good, and we'll confirm and send. Okay, so let's pop out to a bit bigger time frame so we can see where our orders are set. Yeah, I think that we're in a good position here. We're not trying to revisit the high before we took this dip. If it does happen to dip back down into this this demand zone, our stop loss is going to protect us from from that further dive, we'll take a loss, but we're not going to take a loss like this. And risk management is probably the most important thing that we need to get our heads around as we start to become more experienced traders. Um, and I am going to use the practice of getting up and taking a walk while my trade is on. I don't know if you have heard that advice, but several experienced traders recommend that you do your analysis, you plan your trade, you take your entry, you set your target, sell, and your stop loss, and then get outside, go for a run, take the dogs for a walk, make lunch, do something else. And when you come back, you will either have found that your trade is trending up in the direction that you thought that it would, or that you've been stopped out. You could also come back and find out that your trade is come down into this area. And if you ever enter a trade and you feel like that like you made a mistake, you did something wrong, um, there's no reason for you not to exit the position immediately and re-enter later. Sometimes I'll take a position and say I had entered here and then I got this bar. There's no reason that I couldn't have closed that initial position out and just kept my eye on the trend for the rest of the afternoon until I started seeing higher highs and then hop back in. I know people talk about commissions, but really, even in Thinkorswim, if you give them a call and talk to them, they're going to drop your commissions down a bit. For me, a round trip on a contract is just under $6. And I don't know about you, but I have lost much more than $6 holding on to a trade that's gone bad, waiting for it to hit my stop loss because this is the area I've identified as my acceptable risk, only for it to get to my stop loss, hit it, and continue going. So if you ever don't feel comfortable with a trade, hop out of it. There's no reason to let it get all the way to your stop if you entered too early. Um, and I know that that's difficult if you're under the PDT rule, but again, that's another reason I think that if you have a smaller account and you're able to be qualified for futures, that it would probably be a good idea for you to do so because you're not under the PDT rule. When I was working in my account under PDT, I definitely held on to positions longer than I should have because I didn't have another day trade left, or I was afraid to not be able to trade for the rest of the week. But really, we should be more afraid of losing money in our accounts. At the end of the day, it's not about how much money you're making, it's about how much money you're losing. Anyway, those are just my thoughts for the day. I'm going to go ahead and hop off because I've got a bit more studying to do. I hope that this video was helpful. Again, please hit that like button and subscribe. If there are any things that you would like me to make a video about, I would absolutely love to learn with you. And again, please take the time to read the disclaimers, learn about the risk involved in investing, as well as with trading. It is not for everyone, and we want to make sure that everybody's having a safe and happy experience with their time in the markets. And with that, I will let you go. All right, have a fantastic weekend. Enjoy your Sunday. Bye.